Hey everyone, this is Kirk here again at optionalpha.com. Thanks so much for checking out this video tutorial. In this video, we're going to talk all about contingent orders and really using some of the very high level specifics on creating these contingent orders to do pretty much anything you want them to do while not being at your desk, while not trading and having your day job. And that's really what it gets down to. Now, I'll make this one big kind of disclosure at the beginning of this video, and that's that this is really work that you need to put into it. I mean, this is not something with these contingent orders that you're going to whimsically do. If you do truly want to make options trading work for you and make that side income, then you're going to have to put a little bit of effort into this and kind of really take the steps that are necessary to learn how to use these orders and place them in the morning before you go to work and kind of monitor them at night before or after you get home from work. But this is not a one strategy that just kind of catches everything out there and solves all your problems with trading, and it's kind of an automated system. It's not anything like that. It still requires your interaction and your intervention to make it work. But that said, then there's a lot of easy ways to make the market do and place orders the way that you want them to when you're not even at your desk. And I want to go over that today so you guys can see how to make these contingent orders really work for you when you're working. So I brought up a chart here of Tesla, and it really doesn't matter what stock we're going to use, as always with these tutorials. But in this case, Tesla's trading today. It's been pretty active. It's kind of all over the map. And let's just say, for example, that you want to trade a vertical call spread in Tesla, but you're at your job or whatever the case is, the market just opened, you got to go to work, or you're on your lunch break, smoke break, whatever the case is. And you want to trade a long call spread in Tesla. So we're just going to go here and we're going to add an order to buy vertical or a long call spread for June expiration. So you see here we have the call spread. It's 205, 210, and the price right now is actively trading around 250, which is ideally where we want to make this trade, right? Now, what happens if you actually enter this trade and you get filled right away? Well, now you have an active position, but you're off to work and you can't really monitor that position, right? And this is what happens to people. They either can't enter the position A, or B, they can't monitor position once it's entered, so they don't know at what point to take money off the table. They're not really there to watch it, etc. So here's what we can do. We can enter a contingent order or a sequence of orders to actually go into the market in lockstep. So here's what happens with that. So in this case, we just have one single order right now. So it's just the actual order for a 248 debit. And down here in this advanced order feature field, you have this other tab where it just says single order. So that means that this order is kind of nothing attached to it. It's not linked in any way, shape, or form to another order. And again, it's only a day order, so it's only working for today. If you wanted to do GTC, which is good till canceled or good till continuous, then that is another way to do it, where you can just kind of make this trade, and whenever it gets filled, whether it's today, tomorrow, next week, whatever the case is. But since you're still working and you can come home and watch these or watch them in the morning, then you know you can just do a day order and kind of make these trades and see if they fill during the day. But if you have to run right now and you want to make this trade, then what we want to do is we want to set up in advance an order that will sell out of this position today if Tesla meets certain criteria. So in our case, we would want to sell out of this call spread if Tesla rallies and the price of this spread goes up. But how do you place that order without first, making a sell order that just gets executed in the market? Well, there's one way you can do it, and that's with contingent orders. So what we want to do is go down here and click on the advanced order, and we want to do first triggers a sequence. So that's what that means. It says first triggers sequence. And what that means is that this main order up here, once this order gets executed, then a sequence of orders behind it will get executed as well, or will start to be working orders. Whether they get executed depends on price. But this now links this order with another order in the future. So we're going to go right back up to our chart and say, okay, now we want to go ahead and sell this spread as well. So now we have an order that's also popped up below our first order to go ahead and sell out of this spread. Now, because I'm buying one spread and selling one spread, you can notice that the price is about $1 wide or a penny wide. You really can't take advantage of it because right now it's currently at market price. But instead, this sequence order, which is now linked, now this category here says that this sell order is now linked to this main order right above it. So this sell order will only get executed and be working if and only if the first order to actually get into the trade begins, right? So you'll know that you won't be selling a credit spread without first or selling out of your position without first actually being in a position to begin with. Now, if we actually take a look at some of the different things that we can do, we can go up here and say, or we can do main order, and we can say, you know what, I want to sell out of this order in the future if Tesla goes up to a $3 credit. So this is a very common, very easy way to get into the trade today at 240, and then as you're at work or whatever you're doing, even if you're out for the day with the kids or the family, you can set up this order to say, you know what, if I get in here at 248, I absolutely want to automatically create a sell order at 300. So that means that if Tesla goes up to a credit of 300, I'll automatically sell my position back to the market and bank the difference in profit, or about $50. So that's the first way that you can do that contingent order. Another way that you can set it up is you can actually do what's called a trigger. So you can do a trigger that's based on percentage. So you want to say, you know what, I want to make at least 4% on this trade. So whenever I get executed on this trade, I want to at least make 4%. So whatever that price point is in the future, then that's the price point at which I get out of the trade. Or I want to make a credit of $2 more than what the price of the security is right now. So whatever I get into, I want to make a credit, or I want to get out of it at a credit of about $2 more. So you can easily see how these contingent orders can be layered upon layered on top of each other in a sequence to get in and out of trades during the day. So this is a really good example, pretty self-explanatory, of how you can get into and out of a trade and kind of position yourself for an exit without even being involved in the market. So sometimes what I do is I'll enter these trades if I have to go out for the day and I won't be there for the market open, or if I'm taking care of my daughter, then what I'll do is I'll actually enter some of these trades that are contingent, saying, okay, I want to buy this spread, but only if it gets down to X price. And I want to automatically set up a trade so that if I get into that spread, that I get out at a certain profit point before I even have time to actually check it. So there's been a lot of cases where I've had both of these orders filled during the day and I was never around to see any of them, but they met my criteria for execution, and therefore I was able to quickly get out of them. Now, one other feature that I want to go over tonight, in addition to these contingent orders, or I'm sorry, two other features that I want to go over in addition to these contingent orders for new orders, is this really super advanced feature on Thinkorswim. And I want to bring up this order rules dialog. So I got to it by clicking all the way on the right hand side of the screen. It may not be on the video, but there's a little gear box next to the actual order. And what this does is it brings up an even more advanced order rules section of the platform. So you can create this order rule that actually enters this order at a specific moment in time or cancels it at a specific moment in time. So this is where this comes into play, is if you have earnings, or if something you know is going to happen, or if you know you're going to be back in time, or if you know you want to enter this order at the end of the day, you can actually set up order conditions that say, you know what, go ahead and submit this sell order only on 5:30 at the end of the day, or go ahead and cancel this order if it hasn't been executed on 5:30 at the end of the day. And this just really creates another layer of contingency. So you can almost pre-plan out every possible scenario that might happen with your trade, and almost pre-plan out the orders that you want to go out. Now you can also do what's called order conditions in specific market conditions. So in this case, you can say submit the order at a specified market condition. So submit at least when one of these triggers is met, and you can do up to 3 market conditions. So in this case, because we're trading Tesla, let's say we want to say that we will only submit this order if Tesla reaches at or below, or let's do at or above, so because we want it to rally, if Tesla only trades at or above, let's say 215. And so we put that in here, and now we have 215 as our threshold. So we will only execute this sell order if Tesla trades up to 215. Now right now it's at 208 and it's kind of working in the market. So you can see that you can do this at specific market conditions. So you can tell the market to basically place your orders for you, but only when it reaches certain criteria. So this is a really, really advanced way of trading. And now that we've gone through this, I want to show you guys what the best feature of all of this is, and that is the ability to save this type of order. And so what you want to do is that you've created all the different contingencies, you kind of like it, you've been using it back and forth and using it for a couple days, and you now have some of the particular items that you want saved, so you don't have to keep going in here and recreating it, right? And I understand, because that's a big time hassle, and you've got a job that you need to work, and you want to be in and out with your trading. Well, one of the features you can do is you can go down here in the bottom right hand corner, and right by your button to either delete the order or confirm and send, you can click that icon and actually save this order as a template. So I can go in here to saving a custom template and say Kirk's new vertical spread trigger, right? And I can save that right now and say that every time that I want to enter that trade, I bring up this order template and it kind of already lays the foundation. It kind of does most of the dirty work for me, and I can just adjust prices along the way. So that's a really, really cool feature that Thinkorswim has, where you can actually save the custom template of the order. All right, so the last thing I do want to go over tonight is I want to go over closing trades. So this is another big one. So say you get into a trade and you're kind of having a trade working right now. So we, for example, have a short put spread in Bank of America right now that's actually doing fairly well, and we're making some money in it. But we want to make a trade that has the potential to actually make some money, and want to kind of leave this trade on but not have the ability to actually monitor it during the day. So let me just bring up this order graph again, and we want to get rid of this Tesla trade here. So we just want to get rid of that. Perfect. So now we just have that Bank of America trade. We sold the spread originally for around 30 cents. It's now trading at around 19 cents, but it's just not quite at the price point that we want to get out of it. So we still want to have some opportunity, but we can't have, or we don't have the time to actually watch it during the day. So what we're going to do is we're going to actually go in here and place this trade as a 15-cent debit. And we're going to go ahead here and select good till canceled. And what that basically means is that we're going to let this order keep working until it gets filled at 15. And this is a super easy way, and some of you that are more advanced already know this, but this is a super easy way to let the market manage profits for you. So you basically put in your profit target and place the order good till canceled, meaning that's going to keep working until that profit target gets hit. And you place this order and you kind of set it and forget it, right? The old Ronco, the chicken bake oven, right? You set it and forget it. You place this order in the market. It will always work when the market's open. And as soon as it hits that $15 debit and you have the ability to get out of the spread, then the market will take you out of the spread even if you're at your job. So this is a really good way to use a contingent order to manage your expiration or manage your exit in a trade and get out of a trade without even being involved in the trading in your trading platform. So at the end of this video, I want to talk about another really great tool that we really don't cover here because we don't have the ability to see the screen to do it, but that is these mobile trading apps. One of the articles that I wrote just the other day on the blog is talking about using your mobile trading app now when you're at home to actually make those trades. So what I've told coaching students forever is that what I do now is I will start to learn this mobile app even better by going in and looking and analyzing the trade right here on the Thinkorswim platform. So taking a look at everything that I want to do, the quantity, the symbol, the expiration month, the strikes, puts, calls, debits, whatever the case is. And I take all of this information here that I look at on the actual trading desktop platform and I convert it into my mobile app, and I start learning how to make trades on my mobile app, even though I'm sitting right in front of the computer screen. And this is really helpful, and I know that a lot of coaching students have found it helpful because they still work day jobs, they still have a job where they require a lot of activity and they don't have access to their trading platform every day and every minute of the day. And so this has been really helpful because if you can start to learn this mobile trading platform, then when you have orders, you can quickly go into your phone and get out of orders or get into a new trade or hedge a trade or adjust a trade right on your mobile platform. And I think it's really helpful if you can do both of them at the same time to begin with so that you make the right decisions, right? That you're trading the right contracts, that you're trading the right strikes, the right expiration month, etc. And you get familiar with your broker's mobile trading platform. I know that TD Ameritrade has a great mobile trading platform. They keep updating it every time. It's got amazing charts, amazing features. Of course, there's things that they could add to that platform, but it's just really, really good as it is right now. And I'm starting to learn more and more about it that allows me to get out of the office myself and not be stuck in the office kind of looking at trades every single day on the actual desktop. I can now look at them on my phone. So this is a great video tutorial. I hope it was really helpful. If you have any specific questions on different types of orders, because we only covered a handful here, but there's a lot of different contingency orders and different triggers that you can place in the market, please go ahead and go to the main area of the membership site, ask your question below in the comment box. I'll definitely get back to all of those and get all those answers to you guys right away. As always, happy trading.